Hello, this is Wasabi Boat Research, and today I'm talking with Wezek. Wezek and I met on the BadgerDAO forum, and we're talking back and forth about some of the projects they have going on there, and we decided to team up and write a Medium article that was just published that was called Why I Am Unreasonably Long on DIGG, and that initially had a more colorful title that got changed in the editing. But we were both interested in Badger, and I had more interest in the Badger token itself and some of the stuff with bridging Bitcoin over into DeFi and wrapped BTC. I was interested to hear Wezek's take because he is probably the biggest DIGG bull that I've ever spoken with. Like if you search the DIGG token on Twitter, you find a lot of people trash talking it, people who have been LPing and had some impermanent loss on that. So I was interested to hear his take, and we decided to just hit record on some audio and talk through Wezek's thoughts on DIGG, and I thought it'd be great to share it with all of you. So to get started, we are not paid for, affiliated with, work for, have anything to do with Badger professionally, other than being supporters of the project and owning various tokens. So with that out of the way, Wezek, welcome. And could you, I guess, start off by giving us a little bit about your background and how you got involved with Badger?
Yeah, thanks, Wasabi. Appreciate being able to join and talk to you today. So in terms of my background, originally I kind of got into my corporate life through management consulting, did that for a while, and then probably 6, 7 years ago now, moved into software and now do a lot of the same stuff, but just for one company. I got tired of the travel. And my specialty is primarily in, I would say, financial modeling, data-driven kind of analyses. So I do a lot of work with our FP&A team and outside investors to kind of help forecast and provide guidance on various things. So.
And how did you find Badger and get interested in it?
So for me, I got into, I'll just say this really quick, 'cause I think it's relative. I got into crypto back in 2017 and kind of went through all the same cycles that probably everybody listening went to, euphoria, immediate downturn in 2018, frustration. I think for me, I just try to stay invested in it and keep watching and learning and acquiring. And then obviously through the most recent 2020 run up, I was kind of outside looking in at the DeFi summer, as they call it. And so as we closed out 2020, I kind of made it a goal of mine to get more. I wanted to get into DeFi and better understand it. And Badger happened to be like coming out with DIGG and kind of gaining more relevance. And so I saw it pop up a lot more. And then as I started kind of looking at different protocols, I really liked what the Badger team was doing. I really aligned with what their mission was. And so here we are. I really that was my beginning in DeFi, and Badger was where I started. And after looking at other places, it's where I've stayed.
Cool. And this is the first thing we're putting out, so I guess I'll give a little bit of background on myself. I own a couple e-commerce stores and have always been interested in online business with a core skill set of copywriting. Like I love to write. I used to be an editor, writing email marketing, that kind of stuff. And I've always been interested in managing my own money. So I've always been following stocks and, buying individual stocks and stuff like that. And I got into crypto in 2017, but just, threw a couple $100 in Bitcoin, and then sold almost around the top of the bubble and cashed out and bought a nice guitar amp, and then kind of thought, all right, well, we're done with this. And then wasn't really following it until we got around to this DeFi summer last year. And I found myself on a Substack that's now not publishing anymore, but that led to a couple chat rooms, and I turned into basically, from this kind of like buy and hold value investing, buy stock and never touch it, to this kind of like crypto degen behavior in like the space of like a few weeks. And got super interested in it. This was, I started to see the real world utility of crypto and Ethereum and DeFi and what's happening there. So wanted to be a part of it. And since then, I've kind of taken a step back from the degen and trying to just get involved in protocols that I think are really interesting and projects that I think have real long-term kind of legs going forward. So with that, let's talk a little bit about Badger. There's been really like an explosion of content about Badger in the last few days, more stuff on Twitter. They've just been releasing product after product, and their overall mission is to take these Bitcoins that are sitting in people's wallets and bring them to Ethereum and other chains, bring them to DeFi so that they can become productive assets, earning interest, yield. And so I don't want to spend too much time on the Bitcoin bridging stuff because today we're going to talk about DIGG, because there's not really been a lot of interest, or not, there's been interest, but not a lot of discussion, like how-to information about DIGG. So that's what we're going to talk about today. So Wezek, do you want to just get us started with what is DIGG and how should people wrap their heads around how it works?
Yeah, so it's probably the best place to start. So DIGG is just start by saying it's not the easiest concept to understand. So it's like you have a couple different things here. It's an elastic supply rebasing token, so that makes sense. You have stuff out there like AMPL and other tokens, AMPL being the most prominent, but it's pegged against the USD. So that's a fairly stable idea. There's not a lot of volatility to that. And so you're able to kind of comprehend the elastic mechanics that go into that, because it's around a very stable coin or stable currency. DIGG gets a lot more complicated because it does the same thing, but then it also tries to one up that and say no, we're not just going to peg around something super stable. We're going to peg against Bitcoin, right? And everybody here understands the volatility that is accustomed to Bitcoin. And so you have these two highly variable aspects to this, right? Like you have Bitcoin, which can rise and fall massively in the span of hours, right? And then you have this elastic supply mechanic, which is also not meant to be one-to-one. It's meant to kind of use trail the price and use market dynamics to align on the right price. And so for those two reasons, I think DIGG is a much more complex and I think harder to grasp concept for most. And so at the end of the day, it's a synthetic derivative, a synthetic representation of Bitcoin and Ethereum. But unlike using a custodial kind of collateralized side of things where you have WBTC that locks up Bitcoin or REN that mints it, it's a fully non-custodial representation of Bitcoin on Ethereum, which to me, that's kind of the power in it too, is that it's non-custodial. And so, yeah, that's my long answer. I hope that made sense.
So the thing that I like to kind of think of to wrap my head around how this works, because it's very different than other tokens that kind of operate like stocks, where you buy X tokens, which is kind of equivalent to owning X shares of stock, and then number go up, number go down based on the market trading. So walk me through the story of if I go out and buy one DIGG today, and what happens when it's trading above or below peg.
Yeah, so I think the idea is probably to think of it in terms of buying percent ownership in DIGG versus one stock or one token in DIGG. And so when you go out and you buy DIGG, regardless of where it is against peg, you're basically saying, I'm going to buy percent ownership in this asset. Now, the reason peg becomes important, and the reason why you're probably alluding to it, is that supply either contracts or expands based on your position against peg. So I think Gabriel Haynes did a really good video YouTube clip where he talks about these mechanics and kind of has a little slide and shows peg going through the center and kind of how you adjust above and below it. But the idea is that if you're below peg, supply begins to contract. and it contracts based on, it's not like it just immediately goes back to peg, but it's based on a calculation that I won't get into at the moment, but it trails. And so if you're below peg, it might contract 2-3% that day, 1%. It could be 4%. And so that supply is going down. If you're above peg, it's doing the inverse of that, and supply is being expanded. And it's doing this to naturally bring market forces in line and either contract the supply so that the price goes up, or expand the supply so that price goes down. And so the idea is that if you're talking about gamification of it, if you will, or strategy, ideally you want to buy it below peg because you're gaining a larger percent or share in DIGG than buying it like well above peg after weeks of positive supply, because you're gaining, probably the high end of that, and it's probably going to go down at some point, and you might be losing a percent of your share.
Got it. So this mechanism obviously is more complex than just owning I don't know what you'd call it, normal token or static token that the supply doesn't change. You have one token in your wallet, it's going to stay one token. But with DIGG and other elastic supply, the number of tokens is going to go up and down based on this rebasing process. So with stuff like this, I think it's important to kind of look at it from the interests of both the issuer, so in this case it's BadgerDAO, and then also the user. So how does it make sense for both those parties? So if I'm Badger, which I'm not, but why is this a good model for me to adopt to issue this Bitcoin derivative?
Yeah, so that's a good question. I think if you're looking at this from the Badger perspective, and again, I don't work for Badger. Obviously, I'm a big fan of Badger. I've done a lot of, as you mentioned, posting on Twitter. I'm actively involved in their Discord. I hold both Badger and DIGG. But if I was looking at it from the Badger perspective, as I put in the article, I think the reason you have DIGG, it's kind of brilliant in a couple ways. One, their whole mission statement is bringing Bitcoin to DeFi, right, or Bitcoin to Ethereum. That is their whole thing. That everything is wrapped up in that. And so when you're able to provide rewards through a synthetic representation of the very thing, that being Bitcoin, that you represent, that's a pretty powerful reward, right? And when you're able to do it without having to have it fully collateralized with a massive treasury that backs it 1-to-1, that's just even more genius, because you can allow the market dynamics to essentially create the representation for you, and then use that to then provide rewards for the very thing you represent in DeFi. From a practical standpoint, like that, I think that's brilliant. The econ side of me, or the my schooling side, which I majored in econ, I just love the whole concept to begin with, just from a purist standpoint. But from like a very practical, like business case standpoint, it's awesome that they're able to basically create this non-custodial synthetic representation of Bitcoin without having to go through all the custodial aspects, and being able to provide it as a reward for all of their various set strategies and future stuff coming out.
And just to kind of dig a little bit deeper on that, how would this contrast to something like a WBTC or RenBTC in terms of the coins that are necessary to collateralize this, or to back the issuance of DIGG?
Yeah, so I think, and by the way, I think there's a place for all of these. Like obviously Badger does a lot of work with Ren, a lot of partnerships, the Badger Bridge right now, as you bring your native Bitcoin on, you're minting RenBTC. There's a place for all of these representations in DeFi. So it's not to say that like DIGG is better than or taking the place of. It's just that in this particular use case, it's quite brilliant for the Badger protocol to use. And but yeah, like with these other collateralized forms of Bitcoin on DeFi, I'm not going to try to explain this in super technical terms for sake of this time, but essentially the user is taking their Bitcoin and they're minting it, and they're usually receiving some sort of like Ren BTC or in return, or they're just going and buying WBTC, which is, you know, a 1-to-1 to Bitcoin. So it's, you know, in this case, DIGG, you're just able to go buy DIGG and there's no collateral backing it, but there is the elastic mechanism that is basically ensuring that it stays at peg by incentivizing the behaviors of the market. So that's the primary difference. One is fully backed. You can go buy it or mint it in different ways. The other, being DIGG, is using market incentivization or market behaviors to ensure that it stays in line with the price of Bitcoin.
And right now, Badger is using this, I think, for two things, right? They're using it as a reward in their set vaults. So if you're staking your Badger tokens or you're providing liquidity for Badger against WBTC or some other liquidity pools, you're getting DIGG for the most part as a reward for that. And they're also using it to fund their treasury, right? So they've created this synthetic asset and are using it to incentivize people who are locking up their Bitcoin in their vaults, and also just to kind of fund their general operations as a DAO. Is that right?
Yeah, so it's, I don't want anybody to quote me on this, but I think it represents, like, I think the Badger team holds close to 45% of DIGG in their treasury. So they have a very aligned interest with the broader circulating group of DIGG holders. And I think it represents somewhere around 17 or 18% of their total treasury. And so, yeah, it's very much part and parcel with the Badger community. And, you know, there's also, this may be a bit more speculative on my part, but I think I've heard this in various Discord channels or conversations. But, you know, the idea being to, like, DIGG is 2-3 months into maturity right now. And you look at something like AMPL well into over a year, as it finds its steady state, as it finds peg, it opens up more opportunity and more utility too. So, you know, it provides a reward structure that can be strategized to, you know, buy Bitcoin above and below peg. It also could be potentially an asset you could lend against. It could be an asset just for a means of transaction in DeFi. So there's a lot of utility to it. But at the moment, to answer your question, yeah, it's a large part of the treasury, and the Badger team has a large stake in it.
So with the DIGG, if you compare it to a wrapped Bitcoin or Ren BTC, there's got to be a Bitcoin sitting somewhere in a vault collateralizing that. But with DIGG, that doesn't happen. It's
there's nothing. Yeah, there's nothing.
So what's to prevent you and me, after we get off this call, from hiring a developer and spinning up our own Wasabi and Wezek DIGG ripoff that is, you know, our own house brand synthetic Bitcoin?
Yeah.
Why can't we do this?
Yeah, I knew you were going to ask this, and I'll say there's nothing. There's nothing to prevent us from doing it. That's the cool thing about synthetics, and this is probably a whole other podcast, and I could talk just as favorably about UMA and what UMA is doing, but, like, you know, you can do that right now with UMA, right? Like, they're, you know, you can go and create a synthetic, and you can go and create a smart contract or but I think the power in this elastic rebasing mechanism for supply for these types of tokens is usually what's backing it. Like, what's your faith in what you're buying? Like, if I go create a synthetic token that does it fully mirrors DIGG in every way, and I launch it as the Wasabi and Wezek token, right? Like, people are buying it, and that the faith of the mechanics that are built around it will stand to last, right? Like, there's been some bad examples of this that have not gone well in the past, and I'm not going to sit here and explain which ones they are. I think everybody listening probably knows, but you need to ensure that there's a level of trust in the community that's building it, and that's what I think Badger brings to the table. Is they have a high level of trust, they have a high level of strategic partnerships that span, you know, even outside of the crypto community. They've gone really far far above the norm, I would say, in DeFi, at least from what I've seen, in terms of communication, diversification, and ensuring that that level of trust is there and that the mechanics built around this synthetic are built to last. Lastly, I would just say too, there's other synthetics out there. I think the thing for me, again, I'm not trying to sit here and talk about what I like or dislike about others, but what I do like about Badger in terms of its synthetic representation of Bitcoin is that it's the only synthetic representation of Bitcoin that I know of with such a massive community of strategic partnerships, collaborations, and unified goal of bringing Bitcoin to DeFi. And for me, that brings a lot of comfort. I like, if I'm investing in something like this, I want to see that it's part of a much broader ecosystem full of collaborations and partnerships, and not like a single product launched, which I think, going back to your point, is kind of what it would be if it was a Wasabi and Wezek synthetic, right? Like, what's our purpose for doing it? And how are we going to ensure that we can scale and grow and maintain the level of trust that we need to as people would potentially buy it? I wouldn't buy this coin. If I launched this coin under my name, I wouldn't buy it. So that's the main difference, and that's the differentiator I think that Badger brings, is that the community is just like really bar none, like a top-notch community in DeFi, and I think you'd be hard-pressed to find a better one out there.
On top of that, correct me if I'm wrong, but it looks like Badger also has in the works a additional element that is a collateralized stabilization mechanism. So there's actually down the road going to be WBTC or other fully backed BTC that are buying and selling DIGG to kind of back up that target. Is that right?
Yeah. So you've hit on probably a hotly discussed topic within a lot of Discord and Twitter channels. It's the stabilizer vault, right? And essentially what you could call it is some sort of automatic set or transaction that basically tries to buy and sell WBTC and DIGG when it's below and above peg to try to ensure stability, right? And I think this is built on stabilizer. Again, don't quote me on that, but there's been other examples of this done elsewhere too. I think the thing that's key here, though, again, this is something that, if I'm not mistaken, has been like even audited at this point, is probably expected to launch soon. Again, I don't have any other information that anyone else doesn't have or doesn't have from just formal communications. But a lot of people are probably listening would say, like, well, why haven't they launched already? And I think I'm going to give you my answer on what I think. I think one, because an elastic supply or elastic rebasing token, the whole idea is that the market mechanics are going to be what ensures it maintains its peg, right? Like, you want the market dynamics to ensure it finds its baseline. And I think to a certain extent, that volatility has to play out at the beginning to find what's the right baseline? Where is the right starting point for this before you layer on like outside market mechanics that are going to eventually help further stabilize it? So that's my first point. I want to make sure that what I'm getting, it's found its kind of like its comfort zone. Two, whereas the DIGG is a non-custodial synthetic, a stabilizer vault requires collateral. It requires funds to be used to help stabilize it. And so it becomes a decision of what is the best use of our funds at the moment. What is the best use to ensure that it's successful? And so I could be wrong, but if you're trying to figure out where the elastic rebasing token is going to land to start, and you throw a lot of funds at it through a stabilizer vault, but it's still not finding its starting point, you may spend a lot of money for naught. Like, it might not be a worthwhile cause. Ideally, you want to really kickstart this stabilizer vault when it is well above peg. When it has gone above peg and you've basically have the right point to say, okay, now we are going to start strategically building out this strategy to offset it when it's above and below, because you can build up the funds required through that supply positive expansion to then kick that off. And so this kind of goes perfectly in line with what the team's doing right now, in my opinion, and why, again, I'm unreasonably long in DIGG. It's gone through a couple months of supply contraction. So it's building up, it's kind of winding up and ready to kind of shoot above peg. And then you have the KPI options coming that launches May 7th. That is going to be another like strong like outside protocol incentive through the UMA team to use KPI options to drive behavior. And then once you get through that, ideally and speculatively on my part, you're well above peg, and it's the perfect time to launch a stabilizer vault to then maintain that that stability going forward. So I feel like the team has done a really great job in kind of seeing what the end state should be and finding a pathway to get there to ensure the most successful outcome with the funds that's being used.
All right. So at this point, if I am BadgerDAO, I'm convinced that it's good for me to create this synthetic Bitcoin in order to fund myself and use it. If I can get the stabilization pulled off, I mean, this is like turning water into wine, right? This is like a miracle of modern finance. So why? But imagine I'm a hardcore BTC hodler. I've got my private keys chiseled onto a metal plate and in my backyard, and now you want me to go dig up that plate and put my Bitcoins or put my other crypto onto Ethereum, and you not only don't want me to get a fully backed BTC, you want me to get this kind of synthetic thing that doesn't perfectly track the price of it. So what's in it for me? Why would I prefer this if it's not the pure uncut Bitcoin?
Yeah, so I think just to differentiate one thing here, and I think you're kind of alluding to like not your keys, not your coin, kind of Bitcoin maximalist, and even a lot of crypto thought process there, which is not a bad thing. I think that's actually what everybody should really think of in it. Otherwise, you're getting kind of out of the mindset of what it should be. I don't think DIGG is trying to replace Bitcoin. I think it's more of supplementary or complementary. And so setting aside that for a moment, like if you take this kind of Bitcoin maximalist mindset of like the Badger team is basically, their whole focus is basically bringing native Bitcoin on in a way through institutional kind of partnerships like Fireblocks, through like strong strategic relationships, through strong strategic collaborations through like Chainlink and Ren and DeFi Dollar and Stabilizer. Like the list goes on and on. Like it's a very well-respected and strong team throughout the entire DeFi space. So their whole focus is basically doing what you just said in the most comfortable and easiest way for those individuals. So once that native Bitcoin is now found its way through the bridge to now be in, like it's found the easiest path to DeFi, because let's face it, it's not easy to move Bitcoin to DeFi in its current state today. It's a very transaction laden process with a lot of potential pitfalls. So that simple path is being created. So now you're there, and to me, DIGG is a supplementary or complementary aspect to that. It is a reward that allows you to be like, I would much rather receive my yield in a farm in a form of Bitcoin pegged assets versus like a token that, fill in the blank. It's either an animal, a food product, or some sort of interesting topic. But like, I have some level of comfort and security knowing that like, okay, I'm getting a reward that's pegged to Bitcoin that I can then use to kind of strategically either acquire more Bitcoin or transition into other assets. And so to me, it's complementary. It's not like in place of. And so, yeah, I don't know if that answers your question there, but
Yeah, it does. So looking at the DIGG webpage, if you go to, I think, CoinGecko, or like if you check out DIGG on the Badger website, one of the bullet points of copy they have up there is that it's a hedge for BTC volatility, so I think they're getting at, there's this 10-day lag look back window over which it creates calculates its rebase, and so like potentially if you have a big drop in BTC, that DIGG's going to take longer to go down because it's kind of going along with its own price mechanism, and it would take longer to catch up to that. I looked at the correlation, like they're fairly close, but not perfectly correlated. So do you see that as a good reason for someone to own it, just to hedge BTC exposure?
Yeah, no, I'm sorry. You bring up a great point that I wrote about, and I wasn't even thinking about when you mentioned that. No, that is a enormously good reason to it, and that doesn't even include the interest-bearing form of DIGG known as BDIGG, which allows you to avoid rebases. But yeah, I mean, like if I buy Bitcoin today, I basically take on the risk of like not understanding or knowing whether it's going to go up or down. I might have a sense for it, but I don't know. The whole kind of trailing aspect to DIGG and the fact that it doesn't just immediately go to peg, but rather has this kind of trailing rebase mechanism that looks at the last 10 days and moves into peg through a stair-stepped approach, allows you to basically hedge against the BTC volatility. If I'm giving you an example, if Bitcoin is going through supply contraction like it was up until, like, look, just 2 weeks ago, DIGG was at like 40 grand, and I know it's meant to be thought of as a percent, but let's just talk about price for a second. It was at 40 grand. So if I'd have gone in there and bought DIGG at the moment and Bitcoin was trading closer to 55, 58, you're basically buying it with the expectation that it's going to slowly get back to peg. Now it might go through more supply contraction, but you are buying exposure, in my opinion, to Bitcoin with the faith that it's going to slowly be coming back to peg. And if you are selling above, then you're also able to kind of like, I think, hedge some of your exposure to the volatility of Bitcoin when you're holding it like just at spot price.
All right, so you've convinced me as from the perspective of Badger that I want to issue this. You've convinced me that as a responsible Bitcoin holder, I want to own a little DIGG to hedge that. But it seems like you also see kind of a more speculative case for DIGG, and that's tied to some events that are coming up in the next couple of days. So what has caused you to get, let's call it, unreasonably long on DIGG as opposed to a nice conservative allocation?
Yeah, let's talk. Actually, let me say one thing really quick too, that I feel like if I'll be remiss if I don't say. Talking about all these benefits of DIGG and all these positive things, I haven't even talked about the auto compounding APY you get on holding DIGG, which I think is like 43% today. So, I mean, just purely talking about it from an interest-bearing standpoint, when you get DIGG and stake DIGG, you get a form of interest-bearing DIGG known as BDIGG back that then, you can earn. It compounds and is upwards of like 43%, obviously relative to what's in the vault, but it's just another good and positive thing about it. Now, in terms of your question, what's happening in the next couple weeks or months? So I kind of alluded to a second ago, but I know it's probably hard to visualize if this is the first time you've heard about an elastic supply rebasing token, but the idea here is to think of it as like a wave that's going above and below peg. And so, when DIGG was launched, it went above peg, and then it's kind of gone now below peg, and it's been going through this supply contraction for the last, I would say, 2 months or so. And again, if you reference AMPL, it did the same thing, right? And because it was tied to a more stable asset, it probably did it for an extended period of time, but it did the same kind of wave above and below. So just purely on that alone, we've been going through supply contraction. We've been kind of winding the spring, if you will. And what typically happens is it's not like when that happens, you just kind of ease into peg. And it's just like, well, we're at peg now. Like it's usually highly volatile in the reverse direction. So usually you kind of spike above peg. And so in AMPL's case, just for context here, again, I'm not looking at this right now, but I believe it was like the price went up like 4x. And the market cap went up like 15x over a very short span of time. So my belief, again, I believe that DIGG is kind of going through that same cycle and setting up for that same reverse jump over peg. Again, it's hard to time these things, but that's my core fundamental belief to start with.
And let me just jump in and say, looking at these charts is extremely helpful, and I will put a link to our Medium article, which has these charts in the show notes, so that you can.
Perfect.
I would just encourage everyone to look at the AMPL fourth, both the market cap and line that up as to how it's going above and below peg. But continue.
Yeah, I know it's really visually, you have to see these things. I mean, even for me, it's just easier to see than it is to kind of hear someone talk about. But before I get to the other, I just want to kind of re-emphasize what I just said. Like, the core thing about this, again, going back to my belief in DIGG and the team, has to be an underlying belief that the mechanics work. Has to be an underlying belief that the team and the broader utility and ecosystem and partnerships around it are strong and good. It's the reason why, again, you and I haven't gone out there and created our own synthetic to encourage a ton of people to buy and create a 40 million market cap. And so, that to me is the reason why I first was already long on DIGG. I'd been acquiring DIGG through this negative contraction before the NFT launch, and I understood the elastic mechanisms well enough that I'd been acquiring through the negative contraction kind of a little bit and kind of increased my exposure as it went on. But then more recently, with the stabilizer vault, again, this is my speculative hunch here, is that as the stabilizer vault became closer to fruition and it became audited, the team was probably looking for a way to increase the push over peg to more align with the stabilizer launch. Because again, you want the stabilizer to launch over peg versus under. And the reason being is it's a better asset. It's a better use of your funds as you then go in and stabilize. So they launched with the partnership of UMA these KPI DIGG options, which the last snapshot is May 6th and they begin May 7th. And basically it's a really awesome thing. I could talk at length about UMA and their KPI options, which I love, but it just incentivizing behavior through KPI options. It's kind of a new and novel concept in DeFi where everything is airdropped. But and you can check out UMA. They've done something similar with like referrals. They've done something similar with their underlying total value locked options, which are tied to their total value locked on UMA. And so they launched something similar with DIGG that basically, based on your wallet, like based on what you hold in DIGG at this point in time, May 6th, along with a previous snapshot that occurred a few weeks ago, along with NFTs you may hold, it would, they're all weighted in various percentages, but it informs the distribution of these options to all these DIGG holders. And the incentive is that the longer DIGG stays above peg for 30 days, their 30-day maturity options, the accrual of a DIGG kind of pool increases considerably, such that by the end of it, it's going up like 5-6%, I think, in each day. And so it's basically created an outside influence to incentivize behavior in the market to hold DIGG and drive the price above peg, thus creating a perfect opportunity to launch the stability vault. I hope that made sense.
So,
I'm probably talking faster than I'm thinking, so I don't know.
So let's kind of lay it out. So if you look at the history of AMPL fourth, you can see that there is an oscillation above and below peg, and when it goes above peg, that tends to have a positive feedback loop to push it even farther, and that's when the market cap is expanding, and that's when your wealth is accruing to you of that expanding market cap as a holder. And that's just the basic rebase mechanism. But now we have Badger launching this 30-day KPI options, which is just saying, hey, we're going to give you even more DIGG every positive rebase, and they rebase once a day, every positive rebase. So there needs to be at least, what is it, like 4 or 5 within the month. So if we get
Yeah,
Yeah,
five.
if we get fewer
Five.
than 5, then the options don't pay out. But for every positive rebase, and it rebases every day, above 5, more and more of this dig is just going to get split up among people at this snapshot, and it keeps going up. So the maximum is 30. So if every day starting May 6th or May 7th is a positive rebase, then they're going to get 100%. And it looks like there's a vote going on right now in the forum, but it looks like the total pool is going to be most likely 100 dig.
Yeah, which is a pretty sizable amount in terms of USD. So I think last I heard, you said there was a vote right now. Last I heard it was gonna be like 5 million, but 100 dig, just doing some quick math right now, I'm talking closer to 5-6 million, so it's about the same. The thing that's really misleading, what you said is spot on, and the thing where this becomes even more, it's kind of this like perpetual cycle. So by pushing dig over peg and pushing it again, these first oscillations, as you put it, I think very well articulated there, are highly volatile. So like the supply contraction right now has been really painful, especially for liquidity providers. Like, right, it's been, I'm not sitting, I know the article is why I'm unreasonably long a dig. The side of that we don't get into is like I've experienced some considerable loss as well, although I'm holding it primarily in single-sided stakes or sets. But the idea here is that the supply contraction on the flip side will be much more volatile than it will ever again, right? This is like the opportunity to capture that volatility. Sorry, I lost I went completely blank there for a second. My daughter walked in. Help me find my bearings again. What was the question?
That this initial stage, once you get stabilization, it jumps over peg, and that's going to be the opportunity for Badger to launch the stability mechanism, because you don't want to do that when it's under peg. You don't want to be dumping a bunch of money in before it's under peg. It's easier to keep it at peg than to push it back up, right? So I think we've covered most of this. I know you keep an eye on some of the addresses that are in DIGG. Do you have you noticed any whales accumulating or any noticeable things there?
Yeah, so this is I think most people that know Badger know that Oxb1 is one of the strategic partners with Badger, right? They've been NFT launches, very commonly associated. One of the strategic partners of the 5 partners in the Treasury diversification. So very integrally involved and holding positions, both Badger and DIGG. Look, right now, the contraction on DIGG, just kind of real talk for a moment, it sucked, right? Like it's like the circulating supply is like 12. I think the total supply of DIGG is somewhere around 1,300 tokens. The circulating supply is like half that because the rest is in Treasury. Of that circulating supply, Oxb1 holds like, again, I don't remember exactly, but like I want to say 10, 20%, somewhere in that range. And it's obviously, for those that don't follow, Oxb1 is a massive wallet that, I don't know if it's he, she, them, a group, one person, but it doesn't really matter. They hold a massive amount of funds in their wallet, and they're, by all intents and purposes, a whale. Look, this wallet has every incentive to see this over 30 days. To me, this is like highly speculative, but highly exciting to be aligned to the same interest as a whale. Oxb1 was obviously eligible for the drop that happened 2 weeks ago, the 30% distribution. I don't believe there's a root applied to that, so it's a much more heavier distribution drop, or weighted heavier. The 60% drop has a root applied. No, I got that reversed. I'm sorry. There was a root applied to the 30% to ensure that it was fair among all wallet sizes. But the remaining 60% is going to be dropped on May 6th. Does not have a root applied, I believe. And this wallet's going to be eligible for both. On top of that, I think it owns pretty much every, if not all, NFTs associated with this, which also increases chances. The point being is really just this. Even with the root applied, even with everything else, Oxb1 is probably going to get like 20% of these options, 25%. And if you think about the total pool size, this is what I was going to say earlier, the total pool size right now is 5-6 million. But as this goes over peg, the price of DIGG goes up, the price of the pool goes up. I mean, if you go 30 days, there's no way that the pool will not at least double, triple, right? So it could be a pool closer to 15, 20, 12, 15 million. So like this is an opportunity for someone like Oxb1, a whale, or any whale for that matter, to basically jump in, get a snapshot, and probably get a better farm yield than you could based on the capital invested anywhere else. Like I would imagine Oxb1's take on this through the options, if we go the full 30 days, will be 2 million, just purely, and this is 100% conspiracy theory, speculation. It's me talking out loud, but like, I like the fact, my point being is not to get caught up in like what percent of options Oxb1's going to get and how much money Oxb1's going to be able to get through the rebasing options. My point is really just to say that like, I like the fact that in this case, my interests are aligned to this particular whale, who I believe has every incentive and capital to ensure that the price of DIGG stays over peg. That's really the takeaway here. I can get deep down a rabbit hole, so I don't want to. That last comment, though, is really the takeaway.
And the other part of it is the interest of Badger itself, right? Which clearly has designed this whole gamified options distribution and NFT game to incentivize DIGG staying on peg because they have a ton of skin in the game also.
Yeah, I mean, like the NFT DIGG Badger contest on meme, what was it, like a month ago? Supply was probably 3 times what it is now, and I think Badger jumped 20K in like the course of 24, 36 hours. I mean, we've seen just in the past week it jump right up to peg, and now it's just hovering there. I mean, again, these beliefs are my own and my own only, and everybody should do their own research. But if people don't think DIGG's jumping to 6 figures, then I feel bad for you. I think it's going to be a sight to behold, and it's basically ready. It's locked and loaded, and it's going to go. And it's a great team. It's a great product. There's a lot of the right wallets you want to see invested in it. Stabilizer vaults ready to go. KPI options are launched and ready. Like, there's never, like, people say, like, when you bet big. I should probably add a disclaimer that, like, I know I say I'm unreasonably long, but I'm also very conscientious in all my other financial positions and, ensure I'm not like holding debt or leveraged or anything like that. I'm unreasonably long within a risk management strategy that I'm very, very comfortable with. But my point being is not to say like you should just go out and bet big and you should just take out a loan. I don't want anybody to do that. But this is my moment, like where I've said, like, when and bet big when like that's why the title of why I'm unreasonably long is what it is.
Well, Wezek, I want to thank you for chatting with me. I know, this is kind of, we've been talking about this offline. Like I've gone from a bit of a DIGG skeptic to coming around and seeing your position. But I'm just wondering, I always like to kind of ask myself this, like when I'm invested in something, if you have this thesis, what are you looking for? What are you be looking for over the next month? And I think this will be the last question because I got to go run, pick up the kids in a couple minutes. But what as this goes forward, what would you be looking for to sort of like stress test this? Are there any things that would cause you to sort of invalidate this thesis, or things that you would like to see if this is working out how you're expecting?
Yeah. So what I would say is this: I'm not long in anything into perpetuity. Right? Like everything has an expiration date in my mind. I don't mean that. That's probably the bad way to say it. I don't mean that DIGG has an expiration date, but my whole thesis of being unreasonably long in DIGG is very much over the next 3-4 months, right? I think in terms of my broader portfolio, it holds a very strategic place in terms of helping me rebalance and helping me take advantage of situations to increase my exposure and increase my return on certain assets. So, like, long-term DIGG is part of a broader portfolio strategy. Near-term, it's like, to me, 2-3 months from now, there's no better return on my capital than investing in it. So, I do think that long-term, my strategy will probably be rolling it into the stabilizer vault with what the Badger team is doing, taking advantage of the opportunities above and below peg to increase and decrease exposure and that's probably my long term. That is my long term strategy. It's not probably that is 100% my long term strategy with DIGG.
Well, Wezek, I want to thank you very much. This has been super interesting to talk through this, and I know we will both be keeping our eyes glued to the DIGG dashboard that I believe is coming out, and we'll be excited to see how this month plays out. So thanks for chatting.
Yeah, thanks. Appreciate it, Wasabi, and it was enjoyable to chat. So hopefully this was helpful.
Absolutely. Take care.
Bye.